Okay, think about this for a second. Getting a bank account, it can still be a real challenge for millions of people.
Yeah.
But what if you could just do it all from your phone, like in minutes?
Right.
Well, that's pretty much the promise of these things called neobanks. And it seems to be catching on.
Oh, definitely.
Just look at Asia Pacific. Their customer base jumped, over 300% in just a couple of years? That's huge compared to traditional banks.
It really dwarfs them, yeah.
Welcome to the Deep Dive. We're the show that tries to unpack complex stuff and give you the insights you need pretty quickly. Today, we are diving deep into neobanks. What are they exactly? Where did they come from?
Do they even work?
Yeah. And what are the risks? We'll look at examples around the globe and, what problems they're actually trying to solve.
Mm-hmm.
So think of this as your quick guide to understanding this big shift in finance. Doesn't matter if you're deep into tech or just wondering about where banking's headed.
Our goal today is pretty clear. Just lay out what neobanks are all about,
Mm-hmm.
using different perspectives to give you the whole picture.
Okay, let's get into it then.
All right. So, neobank.
Yeah.
It sounds a bit futuristic, maybe.
A little bit, yeah.
But really, it's just let's say, the next chapter in financial technology, fintech, as everyone calls it.
Right.
I mean, we've seen tech mixing with finance for ages, haven't we? From the first ATMs spitting out cash to, the mobile payment apps lots of us use constantly now.
True.
Each step was basically about making money management easier or safer or just, more available to people.
And before these purely digital guys, the neobanks, there was a kind of stepping stone, wasn't there? This idea of banking without branches.
Exactly that. Yeah, back in the 2000s, we saw this concept of branchless banking emerge.
Sure.
Think about services like M-Pesa in Kenya that launched way back in 2007.
Wow, that early.
Yeah. And Easy Paisa in Pakistan started in 2009. They were really groundbreaking. They used basic mobile phones, not even smartphones necessarily, and these networks of local agents. Could be the corner shop, to offer financial services to people completely outside the traditional banking system. It was a massive step for financial inclusion, especially in rural areas.
Okay, so those early mobile services kind of paved the way. What specifically defines this newer neobank era then?
Well, neobanks are more recent. People call them digital banks, challenge banks, lots of names.
Right.
The main thing is they are fundamentally digital, often just an app on your phone, nothing else. And interestingly, the number of these launching globally really exploded between about 2015 and 2020.
Exploded.
Yeah, more and more popping up each year. It just shows how quickly this digital model really grabbed hold.
What drove that surge? Why did neobanks suddenly become such a big thing?
Well, it was a mix of factors, really, kind of a perfect storm.
Okay.
First, you had changing expectations, especially from millennials, Gen Z. They just expect digital convenience in, everything, banking included.
Makes sense. We live on our phones.
Exactly. Yeah. Second, the technology caught up. Powerful smartphones became common. Cloud computing got reliable, AI, even blockchain. These tools were ready. And a really key technical point was this API-first approach many took.
API first. Okay, can you, break that down simply for us?
Sure. Think of APIs, application programming interfaces, like standardized plugs or sockets.
Okay.
An API-first approach means these new banks built their systems thinking about these connection points right from the start. This makes it super easy for them to plug into other services, partner with other companies. It creates a much more flexible, connected system for the user.
Like universal adapters for your finances?
Sort of, yeah. Good analogy. Plus, most neobanks run on cloud-native infrastructure, which basically means they can operate super efficiently and scale up fast, unlike older banks often stuck with, clunky legacy systems.
So, born digital, built on new tech, designed to connect easily. How does that actually translate for the user? What's different day to day?
The biggest thing you'll notice is that digital-first model. They operate mostly, sometimes entirely, online. Apps, websites.
No branches.
Pretty much. It's a stark contrast to traditional banks, right?
Yeah.
And because digital is their main interface, they focus intensely on user experience, making the app easy, even pleasant to use.
Like opening an account.
Yeah. Onboarding's often totally digital. Scan your ID, maybe take a selfie, and you're in. Managing things like cards is usually simple too. Lots of apps let you just toggle your card off instantly if you misplace it.
No, that's handy. Much better than waiting on hold.
Right. Small things saves a lot of stress.
So what else is going on under the hood to make things smoother?
Well, they leverage technology smartly. They often use data analysis, AI.
For what kind of things?
Things like assessing credit risk, sometimes using different data points than traditional banks. Detecting fraud faster. offering personalized financial tips based on your spending habits, even using chatbots for instant customer service answers.
What?
And technically, they often use methods called Agile and DevOps.
Agile. DevOps. Sounds a bit like jargon. What's the payoff for me as a customer?
It just means they can update their apps and roll out new features really quickly, like constantly improving.
Oh, okay.
So if there's a glitch or user suggests something, it can get fixed or added much faster than with a traditional bank's, slow, big system updates.
More like a software company than an old bank.
Exactly. And another key thing is partnerships. They often team up with other fintechs to offer more services. Sometimes they build these whole digital ecosystems, maybe focused on, say, small businesses, offering accounting tools alongside the bank account.
And let's not forget that original goal, helping people left out by traditional banking.
Absolutely. That mission of financial inclusion is still core for many neobanks. Using accessible digital tools to reach people who face barriers, maybe no local branch, maybe a poor credit history, maybe not the right documents for a traditional bank.
Okay, this all sounds pretty good, lots of innovation, but we have to talk about the flip side. What are the risks? Putting your money into a purely digital bank.
Yeah, that's crucial. Cybersecurity is a huge concern for all financial institutions, and neobanks are definitely in the crosshairs.
How so?
We're seeing really sophisticated attacks now. Malware targeting phones, sometimes even exploiting accessibility features meant to help people.
Wow.
And things like botnets launching DDoS attacks to just flood their systems and take them offline. Financial services are, well, a prime target for cybercriminals. They go where the money is.
And it's not just tech attacks, right? It's about tricking people, too.
Exactly. Social engineering is a massive risk.
Like phishing emails.
Phishing emails, fake text messages with dodgy QR codes.
Yeah.
But also things like scammers pretending to be bank staff, even police, to scare you into giving up info or making payments.
Even with security like two-factor authentication.
Yes, because these attacks prey on human trust or fear. We're also seeing more advanced stuff, like deepfakes.
Deepfakes, like fake videos.
Fake video, fake audio, making it seem like a trusted person is calling you, asking for an urgent transfer. It gets harder and harder to know who you're really dealing with online.
That's worrying. Another risk often mentioned with digital finance is illicit use, money laundering, and that sort of thing.
Yes, the potential for neobanks and fintech generally to be used for money laundering or terrorist financing is a serious regulatory concern. Virtual accounts, because they can sometimes be easier to open with, let's say, less friction in identity checks, well, that can attract criminals.
Right.
You have bodies like the Financial Action Task Force, FATF, issuing guidelines on how to supervise virtual currency providers, which includes neobanks offering crypto services.
And there have been real cases, haven't there?
There have. FinCEN in the U.S., for instance, went after a crypto platform called Bitslato recently. They flagged it as a major money laundering risk tied to Russian illicit finance, highlighting weak ID checks, poor anti-money laundering controls, links to ransomware.
So the controls weren't there.
Apparently not robust enough. And even though major crypto exchanges are improving their AML programs, illicit funds still find their way in. It's an ongoing battle. Plus, you have things like crypto mixers, ways to move crypto between blockchains to hide its origin, and privacy coins like Monero. These make tracking illicit funds harder due to their very nature.
Okay, so besides the platform being misused, what about just basic data security for regular users? My personal info.
Hugely important. Data protection is critical. We have regulations like GDPR in Europe setting really high standards.
The GDPR.
And data protection authorities are there to enforce these rules. One last risk, maybe less obvious to users, is profitability.
You mean the neobanks themselves making money?
Yeah. Many challenger banks, despite rapid growth, aren't consistently profitable yet. They need to manage costs tightly and find revenue streams beyond just basic payments, which often have very slim margins.
Right, gotta have a sustainable business. So we see these neobanks everywhere now, but are they the same across the globe? How are different countries handling them?
They really are global, yeah. But how they operate and how they're regulated definitely varies. In Europe, regulators have often been quite proactive, even supportive. Many countries, like the UK, the Netherlands, set up regulatory sandboxes.
Sandboxes, like a playground.
Kind of. A safe space for fintechs to test new ideas under supervision without facing the full weight of all regulations immediately. You also have places like the Nordics, early adopters of cashless tech, like Swish in Sweden and Estonia, with its advanced digital infrastructure, embracing fintech strongly. And there's lots happening in Eastern Europe and Russia, too.
What about outside Europe? Asia seems like a hotbed.
Absolutely. Asia-Pacific, like we mentioned, has seen explosive growth. In India, you see lots of fintech disruptors and challenger banks. Often they find success with a mix of digital and physical elements, a phygital model, they call it.
Okay.
Pakistan has huge mobile phone penetration, which is a great base for mobile banking. And their state bank regulates these electronic money institutions. Singapore's often cited as a model, very fintech, forward regulation, high adoption, thriving ecosystem.
And the Middle East.
The UAE, particularly Dubai and Abu Dhabi, has transformed into a major fintech hub very quickly. Lots of government support and investment there.
So it sounds like the rulebook is different depending on where you are.
That's a really key takeaway. Regulations vary significantly. Some places create special fintech charters, some fast-track licenses, but the common themes almost everywhere are know your customer, KYC, verifying identity, and anti-money laundering AML.
Got it.
Neobanks really need to engage proactively with regulators in each market. Even somewhere like Turkey, the rules basically say digital banks still need to meet the core requirements of traditional banks to get licensed.
Okay, so pulling it all together, when we look at the big picture, what are the fundamental problems these neobanks are solving?
I think number one is still financial inclusion, giving access to people shut out of the old system.
Right.
Then there's just sheer convenience and speed. Everyday banking tasks are just faster, easier on an app.
Lower costs, too, sometimes.
Often, yeah. Especially for things like international transfers, they can undercut traditional banks. The user experience is generally much better, more intuitive, meeting modern expectations. And finally, they can really target specific groups. Like we said, small businesses, freelancers, offering tailored services that bigger banks might overlook.
So today we've really covered a lot of ground on neobanks. We looked at their roots in fintech and branchless banking.
How they work with that digital-first model using new tech.
We also tackled the risks, cybersecurity, fraud, regulatory hurdles.
And their global spread, the different ways countries are approaching them.
And finally, what they're actually achieving, the problems they solve.
Exactly. It's clear neobanks are a big part of this fintech wave, really changing how we interact with money, pushing convenience, access, user experience. But it's vital to stay aware of the risks, and how the rules governing them are still evolving.
Which brings us to a final thought for you, the listener. As these neobanks keep evolving, keep challenging the old ways, what does the future of finance actually look like?
Yeah, how do we strike that balance between making finance accessible for everyone, but also keeping it secure in this increasingly digital world?
It's a huge question, and one we'll definitely see playing out. Thanks for joining us on this deep dive.